It's ugly out there. Why am I looking for a rally? What's up, everybody? Welcome aboard. This is Bubba's midday early update today because a lot's going on and I want to kind of give you a heads up before the close. I'm taping this around noon and markets are near their lows. And again, I would expect to see some sort of a rally from here with the Dow down 700 again, the S&P getting clobbered, the Russell, the NASDAQ, all those indices getting clobbered. I would expect to see some sort of a rally to come from here because, again, we're getting extremely oversold. The panic and the puking is all over the place. You're seeing, again, the media continues to misreport this about the algos because the algos go up and down. This is not the algos. This is individuals that are panicking and puking out of their portfolios, which are pushing the markets down. So the overall selling is fast, it's furious, it's ugly, and it is on now heavy volume with a spiking VIX index. So all these signs point to that the markets could stop here and see some sort of a rally. We're going to see a rally. Whether or not it can rally all the way back, I'm not going to predict that. I'm still want to be looking for the opportunity to sell in these rallies. But if you go back and look at the range we've been trading in, we've been in a big range. We failed to take out the upside on Monday, so it looks like we may be headed to the downside. That's pretty simple. That's basic how we look at markets. And again, I would not be surprised at all to see some sort of a rally come from here for those very reasons. You know, again, markets don't go straight up. Markets don't go straight down. The worst thing you can ever do is to chase a market in either direction. Okay, let the market come to you at a level that you think is correct, and then make your trade. Then make sure you have an exit strategy of how you're going to exit that trade. Don't sit there and freeze. Take a deep breath, relax, and look for a spot. Now, again, we would expect to see some sort of rally, and there's an outside chance that this market could rally all the way back. Now, again, I'm not loading up and telling you to get long here. I'm just giving you a heads up that this kind of action with this kind of heavy selling could create a spring back, and you could get a rip your face off coming from here. Okay, so basically what I'm saying is where we are now, down about 600-700. Okay, we could be down 1,000 or we could get back to unchanged. We're not going to close in this area here. We're going to have a much bigger move coming from here when you look forward to it. So I think that's what you want to look for, and that's what you should be focusing on. In the meantime, the bonds popped pretty big. They got up almost to 144 in the 30-year treasuries. They've come back down to about 143. Look for the bonds. Watch the bonds. If they collapse, that'll indicate that we're going to see a bigger rally. And I think you can see the bonds that have been up big for the last few days should probably start coming a little bit because rates, just like anything else, rates got overdone to the downside and there was too much fear coming in here. Watch the US dollar. The dollar is down a little bit, but again, that is an asset class that has been heavily hampered right here with what's going on. So look for the dollar to hold this 96.20, 96.50 level and bounce back up. Grains are a little bit soft, but they've come well off their lows and look pretty solid. Meats are kind of mixed, a little bit lower. Nothing really too exciting to look about here. But again, watch gold. Now again, if the fear was really high in this market, wouldn't we expect gold to be up more than $3? But the key is here, we've broken out above 1240, so we look pretty solid in gold. I think gold looks to work to continue its way higher. But the general picture here is you've got everybody starting to panic, and you've got people trying to tell you why it should go higher. I'm telling you that right now from here, you could see a little bit of a bounce. Now, I think there's a lot of damage being done here, and I think into the first quarter next year, we're going to see a lot more of this heavy selling. And I think we're going to break down through the bottom end of the range, but not now. This is too bullish of a time of year to expect a straight down move. So again, if you're an active trader, I would look for a pullback for a little bit of a rally. Again, if we get a huge, big spike rally, let it run. Don't try to get in front of it. Don't try to outsmart the market here. I think that's always the mistake that we make as traders, is trying to get too far in front of this. Let it trade, find a good solid level, and again, if you watch it push down, you may want to look at it. Now again, as we get later in the day, some of these dynamics will change. It's still early enough in the day to see the market be able to kind of recover from here. But if we start to fail, keep an eye on the VIX. If the VIX starts to expand again, then that would be giving you a message. If the bonds start to rally again, that would be sending you a message. This is very tricky, and if you're not a professional, this is a very challenging market to trade. So if you trade the blow-off patterns that I teach, go ahead and you can trade those because they're working pretty well. In the meantime, again, there's a lot going on here and there's a lot of news, but at the end of the day, the markets are telling you that they're looking for some real direction, because really over the last last 10 weeks, we've been 24,000, 26,000 in the Dow and churning. So again, don't chase the market. The worst thing you can do is try to jump in ahead of it and try to head it off. Okay, don't fight it. Let it go to a level, find yourself something that you want to do, and then go ahead and make that trade and make sure that you have your exit point. Because at the end of the day, we've got the jobs number tomorrow, which could create something. We've got everybody trying to talk about the Fed now, and isn't it sad that it's the Fed and whether or not we're going to rally or not, or whether we're going to break or not, that it's their fault? The market leaves a footprint. Follow the money, follow the footprint. You will get a much better handle. But again, don't be surprised to see a little bit of a rally here. I think that everything else is held up pretty well. Oil, again, looking to go below that 50, but we've made another run down and we're unable to penetrate down below 50. So again, we could see a rally in oil. We would be sellers of oil at 54, okay? So again, I just want to give you a heads up on what could happen today, because again, you could see some money coming in here, a little bit of short covering, because again, we're down almost 1,500 points in 2 days. That's always a sign, because we're going to see some sort of a bounce and then this decision. In the meantime, this is Bubba's Daily Update. Todd Bubba Horowitz. If you'd like to get a copy of Gold is a Better Way from my friend Adam Barata, go to bubbatrading.com/gold. And if you'd like to help our high school program, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And of course, football night in America. What a lousy game. Tennessee, Jacksonville. I'm taking Jacksonville in the outright upset. We'll see you back here over the weekend with Bubba's Daily Update. Have a great day, everybody. This is Bubba's Daily Update. We'll see you later.